In this video, I want to take you through and I want to do analysis on two charts. We're going to take a look at the S&P 500 because there's something I want to show you there that I think is very important for you to know. And then we're going to jump over to BitCoin, and I'm going to show you a little bit on BitCoin that I think you need to know. All right, now we've talked about these in the past, and this is just a catch up on some of the other reviews that we've had, but I want to come in here, and the first thing I want to show you is this 3-drive pattern and then another 3-drive pattern. All right, so I'm going to come in here, and the first thing we're going to do is we're going to just take our progressive trend line, and we're going to start down here at the bottom. We're going to draw a trend line up across there. All right, so we got a nice little trend line going up, which means we've got a trend, right? And then the trend is your friend until it bends or ends. And I think that was pretty much an obvious end of that trend, don't you think? Now, we had 3 drives in here, what I call the 3-drive pattern, right? So we'll just line those out real quick. There's drive 1. We're going to come in here, there's drive 2, and then this last one is drive 3. So we had 3 little drives in there. I'm going to come in here and identify them. This is your A drive, this is your B drive, this is your C drive. And then we get the little ABC pattern off the back side, right? So we get A, B, C, and this market dropped right down just like a train on rails to 130.9, 161.8 on the Fibonacci projections. And then we start the thing all over again with the next drive, 3-drive pattern, right? So now here we are into another 3-drive pattern. Let's go ahead and take a look at that. And I can already hear you thinking what I'm about to say here, right? Let's take our natural trend line. We're going to draw that from down here at the bottom. We're going to just draw it right up that trend where it come up here just along or touched right here, came up, touched right here. This is our drive 1, right? Let's come in here and knock them out of here. Drive 1, there's drive 2, there's drive 3. It's a little shallow on there. It doesn't really want to stay above that natural trend line very badly, does it? But that's our 3-drive pattern coming in on this next drive. I mean, you tell me what that tells you. I'm not going to make any predictions here. I'll leave that up to you, but I do want to show you one more thing here. If we come in here with our dollar calculator, we're going to go from this very low to this very top. What? That was a 14.45% move. Okay, well, let's just do that again right here. We're going to go all the way from here to where it's currently trading. That was a 14.88% move. This was a 14.45% move before we got the blow off. This is currently at a 14.88% move. This was a 3-drive pattern. This was a 3-drive pattern. Does that mean it's going to flush? No, it doesn't. It does not mean that at all. It's just something I'm showing you as a pattern that's in the market. If we scoot this thing back one more time, there's another thing I want to kind of show you in here. I'm going to take this natural trend line, and I'm going to draw it right across. Look at this. Just all these trends. I'm going to go from right here all the way up through that natural trend line. Look at that. Look at that. Just like a train on rails, right up that natural trend line. And then what did it do? Got to the top and broke. Now, was it a 3-drive pattern? No, it was not. And that's why I want to bring this to your attention. We have a 3-drive pattern here. This is obviously drive 1. This is drive 2. This is drive 3. We're actually in the 3rd drive of a 3rd-drive pattern in a 3rd-drive pattern. That's kind of scary. Because we know that from the probabilities that when you get to a 3rd-drive pattern, a 4th drive is rare. Doesn't mean it doesn't happen. Look at this. It happened right here. We got lots more than 3 drives on this one. We got lots of tiny little drives. Now, they're not big ones, but they were big. I mean, it was a long, big move. There's nice big drive 1, and then look at all these little drive 1, drive 2, drive 3, drive 4, drive 5. I mean, you could go in there and say, for technically speaking, there's 6 drives in there. So that could actually be 2 3-drive patterns, right? 3 divides into 6. Oh, twice. Okay, so that's what we're looking at in here. If we take a Fibonacci ruler and we draw it in here, we're just going to go out of this B drive in here in the center. We'll draw it from top to bottom. That's what these yellow bars are here and these green bars here. I've got that turned on. That's called the Donchian channel. And I've just got it set to help us draw these Fibonacci rulers in there. But you can draw it in there yourself manually. And you can see, look, that market came right back to the Fibonacci sweet spot. Now, if we draw it on this bigger move over here from top to bottom, it didn't come all the way back down to the Fibonacci sweet spot like we would expect it to, right? But if we just come down here to the last 3 drives and discount that first 3 drives, Let's just go right in there. Look where that baby came right back down to the Fibonacci sweet spot. So if we say we got 3 drives here, 3 drives here, 3 drives here, 3 drives here, each time this thing comes back to the Fibonacci sweet spot, which, as we all know, is our cone of probability, right? So we pop in here, and I can pop this up for you real quick here. There's that cone of probability. It's actually the empirical data distribution rule, which says that 68.2% of the time the market likes to return to that one standard deviation, which is why that Fibonacci ruler works, all right? Because it is the empirical data distribution rule, or what I call the delta cone of probability. So that's why that Fibonacci ruler works, and the market has a tendency to retrace half or 50% back into that Fibonacci sweet spot. Now let's go ahead and delete all the drawing tools. And let's come in here and scoot this up just a little bit. And we're going to take our Fibonacci ruler and we're going to draw it in there from top to bottom of that 3 drive pattern. Now, again, it doesn't mean that just because we're at what looks like a peeking out of the 3 drive pattern that the market's going to turn and fall and come all the way back down into this region here. Doesn't mean that at all. It's just probabilities, right? The market just has a tendency to run in these same drives. So if that went up 14% and this one went up 14%, it might be time for it to blow off and come back down into this region. But will it? Does it? Doesn't have to. Markets can do anything they want. They can go as far as they want to go. They can fall as far as they want to go. There's nothing that says that they have to do that. All I'm doing now is just giving you a little bit of an insight into what's happened in the past. Past performance is not necessarily indicative of future results. It's just the best information that we've got available to us. So what I'm saying here is be careful, be cautious. I don't know if there's anything in the future here, in the near future, that might cause a market to fall or not. You know, that'd be a fundamental thing, not a technical thing. But can you think of anything in the future that might cause, near future, like maybe in the next 2 weeks, that could cause a market to maybe have a high degree of volatility and maybe fall? I don't know. I can't think of a single thing myself personally, but maybe you can. And if so, we might want to just tighten our stops. And that's all I'm saying here. Not saying get out, get scared, run for the hills, put food in the basement. I'm not saying any of that. All I'm saying is tighten your stops just in case. All right, tighten your stops. But that said, let's go over and look at Bitcoin. Why do I care about Bitcoin? Well, Bitcoin's kind of like gold. Bitcoin is kind of like a safe haven. It's where people put their money when they're worried about their other money, all right? Kind of a safe haven like gold. Now, you can put it in gold, and that's a good place to put it. It's been rising like a rocket ship lately. But this is Bitcoin, and I think it was Goldman Sachs came out and said that they expect Bitcoin to go to $1 million. Where is it currently trading right now? Well, I'd have to go over and look at the actual Bitcoin, but I think it's around $62,000 for one Bitcoin, and they're expecting that to go to $1 million. That's a pretty crazy thing. Well, how soon is it going to take that? I think they said 30 years. No, not 30 years. By 2030. And we're in 2024 right now, so that'd be 6 years. I think they said by 2030 they expected Bitcoin to be at $1 million, and it's currently trading at $62,000. Okay, anyway, nonetheless, here's Bitcoin, and this is an ETF, exchange-traded fund of Bitcoin. You can buy this on the stock market. All right, so if you got a few dollars, a little shekel in your pocket or two that you want to spend on Bitcoin just in case, it's called speculation. This is BITO is the stock symbol for Bitcoin, all right? It is an ETF, an exchange-traded fund, and here's something I want to show you. Now, I did a little video on this before because we had, what do we have here? We had a natural trend line coming down here, and let's draw that in there. We're going to just come in with our progressive trend line, come over to track and trade, hit that extend line. Oh my gosh, look at that. Isn't that amazing how that works? Right off that point there, right off that point there, right off that point there, and what just happened? What just happened? What just happened right here? What just happened? What just happened right here? Now, we talked about this before, and I came in a little bit early, and I said, hey, be conscious, be careful. Here comes Bitcoin back after a 3-drive pattern. Drive 1. Drive 2, I thought this might be drive 3. Drive 3 went down to here, and it's given us a little bottoming pattern in here, a little head and shoulders formation for those of you who are familiar with those patterns. Let's come in here and draw one in. We got a little head and shoulders pattern in here, almost like a little triple bottom down in here. But this market is now breaking that long natural trend line, and it closed above it, and it's going to close above it again today. That's twice that market's closed above that natural trend line. Does that mean anything? Nah, it doesn't mean a thing. It just means to us guys who read technical charts that we might want to consider that would be a buy signal. A buy signal for something that's been predicted by Goldman Sachs to go to $1 million. Hey, is it going to go to $1 million? I don't have any idea whatsoever. But if I were going to trade this, and in fact, this is what I did, I'm not going to tell you what to do. I'll just show you what I did. I came in here and I said, hey, you know what? If I bought a leap on this thing, how far would I go out? I might go out to 450 days, which is January 16th. So I clicked on that right there. And I came in here and I said, is there enough volume and open interest to buy me a leap on that? And I said, wow, it's above 100 and it's above 1,000, which is kind of my criteria for buying long-term options or even short-term options. And look at the spread on that. It's only $8. Wow, it's a 0.03% of my cost. That's very affordable. I might want to do that. So I went in, and I'm telling you what I did. I went in and bought me some of these shares. Actually, not shares, because shares would be buying them at $19,000. But instead of spending $19,000 for 100 shares, I just came in here and bought me an option. And actually, I bought a few. I bought more than one. Just not telling you how many to buy. I'm just telling you I bought more than one. Okay, so they're in here. You can buy them for $296. That's chump change for something that's going to go to $1 million according to Goldman Sachs, not according to me. I have no idea where it's going to go, and I have no idea how Goldman Sachs came up with the idea that it might go to $1 million, even though it's only trading at $62,000 right now, that it might do that by 2030. I have no idea. All I know is that there's a little line I drew in the sand right there, and it crossed the line. What does that mean? I don't know. It doesn't mean anything to most people, but to me it means, well, hey, come down here and buy a couple of these $296 options that have been said are going to go to $1 million. I don't know if they're going to go to $1 million. That's not here nor there. That's just saying, hey, there's an opportunity to be had here, possibly. You might lose your whole $296. That's possible too, because that's the way this game works, right? There is nothing that is guaranteed in this world, but it's not a very big risk for something that has unlimited profit potential, and Goldman Sachs is saying is going to go to $1 million, and we got a buy signal on it. I don't know. Just pointing it out to you. Thought you might want to know that that's what's happening here in Bitcoin. Take care. See you next time.